Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. I'll be presenting the Asian Session Live Market Analysis webinar for this week, 14th to 18th of July. So I'll be giving the derived forecast for this particular week. And today I am on 15th, but I was not in a position to give the webinar yesterday. So I just postponed it to today, and I am giving the webinar now explaining the derived forecast for this particular week, and also the levels in which the currencies could trade. And finally, I'll also explain with regard to the market reading. Now, if you look into the current market condition, that euro is holding around 1.36 for a prolonged period, and USD after coming to that of 101.28 or 25 level, it has gained nominally from there, but it is still holding around that 101 area. And people are wondering what is going to happen for euro and USD yen. Then in the case of GBP, all along we have seen that they have gone up to that of 1.7182 to that of 1.7171. So in 100 pips range, they are making the moves. And today is the third day they have come to that 1.708285 level. So that will give that impression to that of the traders that similar to Aussie, which has been trading around that 94.50 to 93.50 area. So whenever it comes to 93.50 and it will bounce back to 94, or probably a brief upward stop above that of 94, and then start making the slide. So when the players create that impressions to that of the traders that, okay, it is going to be range bound. So this is the upper limit and this is the lower limit. So everybody will start selling near that of the upper limit. Everybody will try to buy near that of the lower limit. So the players have done the consolidation of this nature, and they wanted to do the shift in trading zone. When they come closer to that of the low, where people find that it is a good support in the case of GBP, 1.7075 area is a good support for GBP, and start accumulating the buy positions. And once they are seen more profit booking opportunity when there is an upward move and then further downward move, so those who have earned good money will try to commit more buy positions. This is the normal human tendency because it is range bound for a prolonged period. So once we buy, then when it goes to 1.715080 level, we can book substantial profit. That is how the players are holding now around that of 1.7080 or 85 level. Now this is the crucial aspect we need to understand. The players use GBP to create the market sentiment and act against that of the traders. So here now they are just holding from yesterday near that of 1.7071 to 80 level and inducing the traders to buy. And once predominant of the traders take the buy positions, we will know from that of the European session what the players are going to do for this. Okay. And the forecast is expecting a big downward move in the case of GBP, and that will trigger the market to make the US dollar gaining move. All along, you find that everybody is talking about why market is hating US dollar, why US dollar is not able to perform, and why US dollar is not liked by the traders. So people are continuously making such sort of emotional statements. And these emotional statements, basically, when you say that whether you like US dollar or not, and if somebody asks you, and can it be useful for trading? Okay, I like US dollar, so I will sell euro. And this might be a logical conclusion, but actually there is no need. When I like US dollar, there is no need that I should sell euro. No? Suppose I like a sweet, then I will only buy that particular sweet. I will not throw away another sweet. No? And this is how they just induce the traders to become emotional. So Once the traders think that, okay, everybody started liking euro, then we are also tempted to go in for buy of euro positions. So this is how they try to create the herd mentality. Unfortunately, they have been doing it for a prolonged period. And in that process, many of the traders got cheated and many of the traders have lost money. Then as a result, you find the volume has drastically come down. And in that process, you find every day during the Japanese session, if you see the net change level, hardly it will be 1 to 10 pips. It's very unusual. They have been holding, and the spread in the case of Euro, GBP, and all is about 10 to 15 pips. They used to make at least about 40, 50 pips in the case of USD and Aussie for some time. But now even there, it got reduced. So you find the players are simply holding the market with a small fifth decimal change in order to give an impression that the market is active. Otherwise, you find the traders' volume has dwindled to a greater extent. People may say that it is a $4 trillion market and things like that, but actual positions are vital, because in a leveraged market, when you take one lot position, then it will be 100K position of dollars. So in that leverage condition, they can calculate as $1 trillion positions, etc. But actually, somebody is there to take one lot. If all the traders started taking one mini lot or one micro lot, then we need 10 traders or 20 traders to take positions to get one lot in the market. And this is what actually happening. It is a very unfortunate situation. And hope the market will try to recover the volume soon. Now coming to that of the expected market moves for this week. So it's the third week of the month of July. So we'll come across week beginning false move, followed by that of the trending move. Yesterday, they just formed up during that of the European session as the week beginning false move, similar to that of the last week. And then they started making a small slide. And then today, they are expected to make the swing and slide during that of the European session and form up during European session. And after this form up, they are expected to make a big drop in the case of Euro and GBP during that of the EUR session. It might be a surprise to that of the traders. Then tomorrow, they are expected to hold again during that of the Japanese and the European session, because whenever the slide is expected, they make only 5 to 10 pip slide. Whenever a firm is firming up is expected, they are making only firming up of 10 to 15 pips, not more than that. But the drop, normally they make about 100 to 150 pips. Earlier occasions, they are doing about 50 pips now. So they are expected to make the drop during the US session today and tomorrow. That will change the market sentiment and everybody will start selling tomorrow. On Thursday. Then they will try to hold the market during the European and US session on 17th. At that time, many of the traders who have taken the sell positions will try to cover the short, thinking that probably the market might bounce back. But they are expected to make a small dip in the form of move on Friday and then make a big drop again during that of the European session and then slowly swing and slide. Then fourth week, we will come across more visible drop in the case of Euro and GBP, and you will come across the US dollar gaining moves happening in the market. And you could come across the trending move. And after the fourth week, you come across the fifth week, and which gets over on a Thursday, 28th to 31st is the last week of this month of July. Then 1st of August starts in that particular week. So that will be the monthly trend reversal time. So they are expected to make the drop more aggressive during that of the US sessions on today and tomorrow, and also on Friday. So these are all the potencies. So watch for those potencies and try to take the positions. Then you will be in a position to reap the profit. And you know that whenever the market drops, a lot of traders, those who have been keeping away from the market, looking into the chart and looking into the other aspects and find that, okay, this could be the support, we'll take a buy. Because when the players continue to gain the levels, like what they have done it in the case of GBP, then the traders keep away from the other market because they are afraid to take a higher level buy. At the same time, if they take a sell, they are not booking profit. So they will avoid taking positions. So that sort of scenario will happen. Then gradually the players will try to drop and induce the traders to take the buy positions. Now you find that GBP is at the level, people might think that it is a good entry point. So that GBP, when it goes up, will be able to book profit. That sort of feel they will try to create. And they will try to get the impression from the market. But the players are here to sell and drop the market. And you know that they don't make the hat trick. So watch carefully and understand how they try to deceive the traders and don't get deceived again and again. Then with regard to the levels in which the currencies could trade, so Euro formed the high around 36.40 yesterday and come down to 35.92. It is in that range. And GBP from the top 71.44, it has come to 70.71 level, and it is expected to make further downward move. And USD made a brief downward move and then start making the forming up, and it is expected to make the range bound moves till tomorrow. And afterwards, you could come across the gain above 102, 103, etc. in this week. And USD CHF is expected to consolidate and go to the 0.90 area, and it could climb slowly upward. Then in the case of Canadian dollar, after a prolonged consolidation, and everybody thought that USD CAD is going to strengthen in a big way because it has breached all the supports. And everywhere I have seen the remark that USD CAD is expected to come down, or Canadian dollar is expected to become stronger and stronger. And after spreading all the sentiments, the players, when the traders have committed the positions around 1.06 level, they quickly gained to 1.07 level. And after gaining to 1.07 level, traders developed the feel that it could make one-sided move, but they halted the gain and just hold it. So anybody takes a buy position in the case of denominator currency, when the players hold the currency in a narrow range, they lose the patience and liquidate the long positions. Then afterwards, they think that, okay, it is not able to breach that resistance, so take a sell. Then afterwards, the players will try to gain the levels. And in the case of denominator currencies, they make the one-sided gains or one-sided drops. So that we need to follow. And it is not like the numerator currencies like Euro, GBP, and US Australian dollar. They make either way moves. So they can just, if you have a higher level sell or a lower level buy, or even if you have a lower level sell and a higher level buy, if you hold it for 2-3 days, you will be able to book profit, at least do averaging and exit out of the position. Whereas in the case of denominator currencies, if you are on the wrong side, as you wait, they will continue to increase the loss. So we need to understand the behavior of the currencies differ, because In the case of denominator currencies, the same old players, it is not different players, the same old players, they try to make one-sided move because of less volume when compared to that of the numerator currencies. Now, we'll go to the market reading and try to find out where exactly the currencies are heading. So I had noted down yesterday the initial lows and the highs, and also today's the initial lows and the highs. And you can see that almost they are in the same range in all the currencies. We will study with regard to euro. Euro formed the low 1.3617. It has breached and formed 1.3613, and the high was 1.3626. So now we understand that they made a brief downward move and holding around the 1.3618 now, around that initial low. So they're expected to slowly slide. And in the case of GBP, 1.7079 was the initial low, but they breached the low and formed 1.7077, and 1.7091 is higher. See, if they want, they can just go above that at the high, but we need to read their intentions using the market reading technique, why they just made the cut of the low, and then they are just firmed up. So again, once they make a downward stop and firm up and breach the high in 30 minutes time frame, then we can understand they want to make either a downward stop and followed by extended move or the intentional move on the upside. Whereas they just made a downward stop and holding. That's all. Not breach the high, which is not even 10 pips, but still they are not breached the high. So that means their intention is not to rise. And they simply hold and give that impression to the traders to buy. Then later on, they are expected to make the slide from the European session. They will firm up to that of the high, probably during the European session, and then start making the slide. Then in the case of USD-Yen, 101.33 is the low, 101.65 is the high. They are not breached the low high. Then Swiss franc, 89.15 is the low, 89.24 is the new high, 89.21 was the initial high. They just breached the high and formed 3 pips higher, a new high, and come below that of 89.21. They are simply consolidating here and hardly about 2-3 pips move in the case of Euro and USD CHF. So you don't find any significant move as such, and they are not breached the low also, indicating that they just made an upward stop and holding it, and slowly they will try to gain in the case of USD CHF. Then Canadian dollar, 1.0711 is the low, 1.0727 is the high. They are not breached the low of the high. In the case of Australian dollar, 93.84 is the low, 94.02 is the high. They are not breached the low of the high. So what they have done in the case of majors alone, they just made a brief downward stop in the case of Euro and GBP, and a brief upward stop in the case of USD CHF. Yen, they are not handled it. So that means today they may not give much of an importance to yen, and instead they will try to handle the European crosses. So, as you see, the forecast says that today they are expected to form up during the European session, and then they are expected to make the drop. During firm up, if we try to take a sell position during the late European session, then we'll be able to nicely book profit. So look for such moves and then try to commit positions. Also before that, we know very well when the spread is very narrow, and they will take some time to increase the spread by making an upward stop and then the downward stop and etc. Only when the spread becomes more than 40 pips, if we try to commit position between the high and the low, if we try to commit position, we'll be able to quickly book profit. So as traders, don't develop any sentiment towards US dollar or towards euro or towards any other currency. Don't say that I like euro or I like GBP, etc. because they are all tradable currencies. They are all leveraged positions. They are not physical currencies. So if you try to use all the words which are related to the sentiments, like I like, then it easily triggers your emotions. So if you want to make a control on your emotions and not to become perturbed during the market moves, then you have to detach your emotions from that of the market. Only then you will be able to really understand what is happening in the market and then try to commit positions. You will be able to really do fearless trades. So you have to get rid of the fear. It is an exercise. And in order to get rid of the fear, we need to first of all understand what the players are trying to do it. And when the market is so subdued, when suddenly they make an upward stop, and don't become perturbed and don't become panicked and don't imagine that it will straight go up to 100 pips. Then you become really panic. Instead, okay, all along they have been doing only about 5-10 pips. Where is the possibility that they can straight jump about 100 pips? It is not possible unless and otherwise it is like a bouncing ball effect. When the ball is hitting against the floor forcibly, then it will bounce back very fast. When it is in your hand, if you try to push it without you lowering your hand, you find that it can only go to a smaller height. So in the same way, when they are holding it simply and try to make a stop and that will be a very brief upward stop for about 5 to 10 pips. There is no need to become panic. And if you try to become panic for 10, 15 pips and they make 100 pips, probably you may get heart attack. So all because you perceive it that way and you imagine. So most of the fears are out of imaginations and not real. And nobody is responsible because the players have to do the market moves. And they have to see that the traders become victim. So it is like the predator and the prey. So when a predator is trying to predate upon the prey, the predator will try to do all sorts of tricks in order to capture the prey. The prey has to escape. And it cannot simply say that the predator is merciless. No, there is no point in telling it. So we need to understand that we have to understand the market, get rid of the market fear by developing a good sense about the market, and always expect the unexpected so that you don't become perturbed or your emotion is not triggered, and look into the market moves in relation to that of the pips rather than the charts, which are magnified. Even if you look into that of the chart, also look into that of the live market code page parallelly so that you will be able to understand they have only done 2 pips rise. But if the chart is magnified for 10 pips, because the spread between these is 13 pips between the high and the low, if you look into that of the euro chart, and the chart, when you make it in a full screen, it will appear as if for 1 pip it has made such a big candle. Then when the candle becomes 5 pips candle, immediately you think that they made a big rise or a big drop. So don't magnify your imaginations using that chart as the trigger, but instead you compare it to that of the net changes, what they have done it from time to time, so that you will be able to control your emotions and you will be able to develop the right trading sense. Because most of the traders close their positions out of fear. And most of the traders take wrong decisions during emotional stress. So if you want to become a successful trader, control your emotions. And I can simply say that control your emotions. But unless and otherwise, you know the technique by which you can control your emotions, it is not possible. You will get perturbed again and again. The market can trigger your emotion. So what is the main factor for this emotional stress is you become surprised you don't expect. Market means swings. So it has to make up and down moves. So you don't expect that euro can make up or a down move. Instead, you presume after in discussing with various people or looking into the various chart, you presume that euro has to come down. When it goes up, it becomes a surprise. But if you envisage, okay, euro has got a potency to go up or come down. But the first, whether it is going up or coming down, it is to be seen. Instead of committing the position and afterwards expecting the euro to come in your favor, you commit the positions when they are making the quick moves. So when they increase the spread to more than 40 pips, and during the late session, if they make an upward stop and understand they wanted to they are trying to make an upward stop and before making a slide, at the time you commit the position and use the hedging to limit the risk, and your hedging will say that don't be perturbed because we are going to risk only 30 pips. Whether euro is trading at 1.36 or 1.26, it is immaterial. Whether GBP is trading at 1.72 or 1.70, it is immaterial because you are risking only 30 pips. That sort of mindset you need to develop in order to get rid of the market fear. Because I can tell you again and again in the market trading technique, etc. But unless and otherwise, you control your emotions and you develop a sense that I will not be afraid of the market moves. Then only you will be able to listen to this and understand the value in it. Otherwise, you will think that it is yet another method and impatiently you will try it for a day. If it is not working, then you will simply discard, okay, it is the 100th one I discarded. I will look for 101 method or 102 method and things like that. So you will always look for some strategies which are going to come up as emerging strategies, etc. But ultimately, they may work for a few days. And afterwards, when the players make shift in trading zone, you find it is not working. The same thing has happened with regard to various of the expert analyzer or whatever it is, you call it the EA. And so when you use the EA, which is working and earning money, afterwards you find that it is losing as quickly as it is earned, then you discard and go in for another one. So you ask somebody to eat for your hunger. How you will get satiated? If you are hungry, you have to eat. It is a simple logic. Instead, you expect somebody to trade for you and somebody to do the analysis for you, somebody to make a market understanding and simply tell you, and you will try to eat. And in that process, if you find that the taste is no good, you just discard. You continue to discard, but you fail to learn that if at all I am hungry, anybody who can help in this world is only myself. Nobody else can come and take care. Probably the parents can take care of the younger ones for some years. Afterwards, they will say, you stand on your own leg. In the same way, you have to understand the market on our own sense. So if you've got any questions, kindly ask. I'll answer those questions. So I'm trying to answer to the questions which are asked here. Radhakrishnan, good morning. When you say GBP is higher level, swing and drop, does it mean that it will rise close to 1.7150 and then no? You know that the high in the case of GBP is 1.7091. So probably they will try to take out the stops closer to that. They may go up to 1.7095 or 98 and then start making the slide. Then Ahmed, kindly show me the level space again. I will show the level space again. Rather, well, gold and oil also dropped today. They had done the week beginning false move in the case of gold yesterday, and they are expected to rise. Oil, they are expected to make volatile moves either way. You have to carefully watch it and trade it because it has become a sensitive commodity. Because depending upon the news, they are making very quick moves on the higher levels. They are building sell positions. So quick upward stop-ins or the potencies. In biology, will there be an impact on Cornet's speech on the downward? See, the players can make use of the speech on the positive as well as the negative side. So ultimately, I have given you the expected market moves. So you find what is expected, whether firming up or a drop. So during the drop time, if somebody speaks, that might be used for the drop. So I won't be knowing what is going to be the trigger, but I can tell you the market is going to behave that way. Because see, if you give more importance to that of the attributes, then you fail trading opportunities. You fail to understand the trading opportunities. Instead, you try to focus. See, you can listen to the speech, absolutely no problem. And during the speech, you will find that they'll make small up and down moves. And probably after the end of the speech, you could derive that, okay, GBP is expected to go up, but they may drop it. Simply say that he has not spoken anything about what is going to be the future plan. So they can give any sort of attributes to that. So if you try to relate the fundamentals with that of the speech or the data release, etc., there is no hard, fast or guarantee that based on the fundamentals only the market has to make the move. Several occasions, including the non-farm payroll, and when non-farm payroll was excellent this time, they made the drop in the case of GBP and quickly gained it. What do you understand out of that? Demand. So you recollect how they have behaved in the earlier occasions, so that you will try to give less importance to that of the speech or the data, etc. You will try to focus on the market and try to find what sort of false move they are making it before that of the trigger times. So the speech or the data release, they are all nothing but the market triggered times. And they are not going to influence all the time in a positive or the negative way. And you may think that the market is correlated to that of the data release. And sometimes it might be positively correlated, sometimes it might be negatively correlated. Then could we expect Euro-Yen to go down? They are expected to make initially a downward move in the case of USD-Yen along with that of Euro and GBP, like how they had done it last week. Then again, they will start making the USD gaining move in the case of USD-Yen. So along with that of Euro and GBP, they are expected to make a downward move in the case of USD-Yen. So when Euro is making a downward move and USD-Yen is making a downward move, then Euro-Yen is expected to make further downward move. Now you find that Euro is 1 pip negative net change and Yen is 5 pips positive net change. After taking up the stop above that of the high, they will, during that of the European session, they are expected to make the downward move in the case of USD-Yen again. Then they will make an upward stop in the case of Euro and then start making the slide. Then you will find Euro, GBP and USD-Yen are making a downward move. So understand how they are making the contrarian move. So how they prepare themselves and try to do the contrarian move. If you watch the net change closely, you'll be able to understand how they make the change in the sentiment during session change time. And then you know how exactly you can position yourself. So for that, you need to do the research. You should have the research mind and you should be able to perceive the market using the live market code page. I'm not simply or blindly telling you that use only the live market code page to understand the market, because if you look into that pip by pip, how they are making the move in relation to that of the other currencies, you'll be able to simultaneously see that will give the real insight for you about the market. And if I say that I don't follow a chart, immediately people think that, no, this man does not follow a chart. So it may not be suitable for you. And this sort of feel you try to develop it because these things happen. You wanted to earn quickly the money, but you do not want to learn the process of how to make money. So if your mindset is of that nature, and if somebody thinks that, okay, I will acquire an MBA degree so that I'll get a job and I'll show my MBA degree before of the higher ups, then automatically they will give the job. If you think like that, you will be the fool in the world. So that means you don't have confidence in yourself. Instead, you have the confidence in the MBA degree what you acquired. So in that process, what happens? You just present your degree certificate before that of the people who are interviewing you. And they think that this man does not have a self-confidence. He is not presenting himself. Instead, he is presenting the degree certificate without opening his mind. That means he is depending on somebody. Instead, you speak out. And from your speech, they should be able to understand you are worthy of this degree. Then automatically, even without producing the degree certificate, you get a job. No? The same way, you need to understand that if you are fully equipped, understand the market, and the players cannot cheat you anymore. Then, can we expect USD index to reach 80.4? So US dollar index is expected to gain slowly, but you know that whenever they are making a contrarian move, it will have some impact. Probably you may not come across a visible rise, and then later on slowly they will increase the US dollar index. Do you mean if there is spread of 40 pips, then based on current price, near high or near low, we need to take position. Yes. So we need to wait till they make 40 pips spread between the high and the low. Then when they are near the high, take sell position. When they are near, and if they are not breached the high for more than 30 minutes, take a sell position. When they are near the low and not breach the low for 30 minutes from the start of the session, take a buy. Then you will be able to make a definite profit. And you know that early and the late sessions, they handle the majors, and the crosses they handle during mid sessions. So if you want to trade in euro, wait for the early session or the late session and commit positions. So they are all synchronized. They are all to be synchronized. You learn them as separate concepts, but you have to synchronize all the concepts. And then you find that you simply use live market quote page, use the concepts. What I explained, that spread has to be more than 40 pips. And during the earlier, the late sessions, you can take positions in the case of majors. And they only handle 2 pairs at a given time. And if they make a downward stop, and then stop cutting the new low for 30 minutes, take a buy. And if they are making upward stop and stop cutting the new high for 30 minutes, you take a sell. And during the early or the late session, not during mid session. Okay, then you will find that the opposite move will happen in the market, and 100% you will be able to book profit. You say that take sells in Euro and GBP late European session. Yes, you can take. Yellen is speaking early US session. Will she probably be the trigger? Yes, probably she could be the trigger, strengthening of the US dollar. Can we expect Euro-Yen to go down? Yes, Euro-Yen to go down initially, and later on, when US dollar, USD Yen goes up from tomorrow, you'll come across Euro-Yen and GBP-Yen are expected to go up. Thank you. I am not proud. Committed an error that you clearly mentioned selling on low. I would like to share with people that the details that you mentioned and the psychology that you take time to explain is crucial for the strategy to work. Yes, any strategy for that matter, the human mental acceptance is very important. And mental acceptance comes provided you become open-minded. If you are biased and if you are not inclined to understand or not inclined or not interested simply, then you don't learn it. So you have to have an inquisitiveness and you should also have the perseverance. No, I have to learn somehow and win in the market. That sort of determination is very essential. Okay, you set the goal. Many of the people set the goal, okay, and they have got the tendency to ask any of the mentor for that matter, okay, I will subscribe to your service. How much I'll earn? This is the next question they ask. They wanted to set the goal, but they don't understand what is the process they have to undergo. And the process of learning is vital. Okay, I can give the call, but you have to commit based on the call. Only then you will be able to earn. So there comes your inhibition. When I say sell euro, when it is firming up quickly, you hesitate selling. And later on, you realize that, okay, fine, I could have taken a sell position. I would have earned about 20 pips. Doesn't matter. Next time I give the call and you try to take a sell position, you are able to make money. The third time you take a sell, but they make a quick upward move, then you immediately say that, no, you are wrong because you did not use the hedging model. See, you understand that? So all these things ought to be taken into consideration. Instead, you take only whichever is convenient to you. And later on, when the market goes against, you start ailing at others without understanding that you are not incorporate the system in total. See, if you are driving a car, in the car, you come across accelerator, you come across clutch, and you also come across the brake. And they are to be applied, depending upon the navigations. So you have to use it, maneuver it properly, and to drive it. And once you learn it, automatically you do it. Nobody tells you that apply the brake or give that accelerator and things like that. Automatically, when you are talking to your neighbor, when sitting adjacent to you, you are able to drive the maneuver the car very easily, navigate easily. How? Because you become habituated. So you try to become habituated to trading, not become addicted to trading without understanding what it is. Habituated trading by mechanically incorporating all the concepts of what I explained to you, including the risk management. Then the forecast alone will not be enough. The levels will not be enough. The type of moves will not be enough. Ultimately, the trading strategy is going to help you to make consistently money from the market. Okay. Can you please recap on short if you take the trade for today? I explained that late European section, you can take a sell and then try to make profit during the year session slide. Then Eric, will EURUSD make a lower level or a higher level trend move for this week? GBP is expected to make the downward move in this week and change the market sentiment. Then Yaz, what is expected for Aussie dollar? Aussie dollar is expected to come down, sir. Very good point. Okay. Okay, no more questions. So I'll try to wind up because I had taken more time. 15 minutes. So first of all, kindly understand the forecast is one component of our trading system. So this is the forecast page. This webinar is being recorded. So you kindly follow the forecast, kindly follow the levels in which the currencies could move, just have an idea whether you can do only sell and buy trade in the case of numerators and buy and sell trade in the case of denominators, And the numerators, whenever you come across a firming up move, you can take sell positions. Not exactly as soon as you open the trading platform. Don't try to take positions. Watch and also understand the market timings. No, during the early and the late sessions, you can take positions in the majors. During the mid sessions, you can take the positions in the case of the crosses. Then afterwards, you do the market reading, whether they had done the upward stopping or a downward stopping, or whether they are making an extended move on the upside for 2 hours or intentional move on the downside for 2 sessions on the start of the third session. So identify the type of moves they are doing it in relation to that of the session timings. So if they start the downward move, for example, from the early European session, European and the US session, they will make a downward move as intentional move. The next day during the early US session, Japanese session, they will make a quick downward move and reverse the market and make an extended move for 2 hours before, and then make a gap time false move, then stop on the European session and then start making the move. This is how they construct the moves. So that we need to understand. So you are looking at the chart and trying to find what they have done earlier. Instead, you try to give the projection by yourself. You try to see what is going to be the next move, what is going to be the next move. Then if you focus on it, you will be able to identify what is going to be the next move. Because they do it in a very typical, systematic way. But if you look into the chart, you don't understand that. But if you look into that other move using the live market code page, you understand it. It is so simple to follow them. I don't know how I can express it again for you to develop an interest in looking into the live market code page and try to do trades effectively. So I take this opportunity to thank FX Fleet for the facilities provided and also you people who have come here to listen to my webinar. I'll come back again on Thursday and review the forecast, what I have given it, and we'll also do the market reading on Thursday. So until then, wish you all very happy trading and see you on Thursday.